All right. Hey, everybody. Good day. This is Jeremy coming at you for the weekend market bias update report for Sunday, the 17th. Jumping right in here to the S&P 500 futures. We are fighting back just a little bit right now. You can see futures have been open here for about 3 hours Pacific Standard Time, and we are fighting, trying to recapture the moving averages that got broken in some fairly serious fashion on Friday. We had a little bit of a confirmed breakout here on Thursday. Bulls came in, closed above the highs of previous pivots, and that was considered a bullish breakout. Faked out and then dropped significantly on Friday with a massive bearish candle with increased volatility, increased volume down below there. So there's more volume than a typical trading day over the last 30 days. So that is not necessarily great for the bulls. Broke down, closed below the moving average, especially the 9 and the 50 period there. We are fighting right now as we speak, trying to reclaim that. Both of those moving averages are actually converging around 4,508. So if we can get back above, let's say, 45.10 somewhere in there and close above that, that would be a very good development. But you can see if we drop this down into the intraday chart, the amount of selling pressure, just nobody wanted to buy this dip at all. And it really wasn't until the volume just stopped with the trading day closing that really allowed it to put a floor in. So we are right at the base of the week's low, basically. And really need to see that hold. If we break that level going into the week here and drop, especially if we close below the 20-period moving average, which is around 44.81 currently. So let's just call that 44.80. If we get below that 44.80 level, really honestly, we are probably looking at another dip back down to test the lows around 43.50. And that is partially due to seasonality. Usually in September, we do see a significant dip going into the second 2 weeks of September, and then a rally from October on through to the end of the year. Usually in September, we would get a nice bump up prior to that sell-off. So we're not really tracking that seasonality quite as closely as we normally do. So whether you believe in seasonality or not, just a little interesting tidbit that we do usually sell off in the second couple of weeks of September. We do have some decent support here, but if that breaks the 44.80 level, like I said, the most probable scenario at that point would be lower prices over the next couple of weeks going into October. So really important level right now for us to track and for hopefully the market to hold that level. Very similar thing out on the NASDAQ. I mean, the chart looks almost identical, right? We had a little bit of a breakout, fake out. We didn't actually confirm necessarily this breakout. It was kind of an equal high over here to the pivot on Monday. So most traders probably did not actually get triggered into a bullish trade on that, did sell off right back down, broke the 9 and the 50, and are now sitting a little bit tighter on the 20-period moving average versus the S&P. Again, really need to hold that level. The NASDAQ is struggling quite heavily right now with a pullback in semiconductors and also just negative news on Apple. If we go out to Apple's stock here, you can see ever since the Chinese news came out where they were tightening regulations on iPhones and stuff, especially with anyone tied to the Chinese government, it just got pummeled. And even with their investor day and everything, releasing new iPhones and everything like that, they just couldn't get some love. So they are actually already kind of hovering down by the lows here. Not a very good look. This chart needs to clean up, but we're seeing a lot of that in a lot of the tech sector right now, just struggling to get that bid higher. Microsoft did have a nice little potential breakout, did signal a close higher, even though it was an indecision candle there on Thursday, and then Friday just got blasted right back down to the base of that consolidation zone. So on Microsoft, break below the 20-period moving average would signal probably lower prices to come and probably coming back down to the 316 level. Hopefully the bulls can step in and buy this back up and reset this pattern and hopefully give us another shot at a breakout of around 340, somewhere in there. Going out to the Russell 2000, Russell 2000, honestly, just choppy, kind of neutral right now. It is sitting on its rising 200 period moving average here at about 1850, and that has been acting as support all the way back until mid of last month. So about a month now, that 200 period moving average has been acting as support. If we do clear that and close below these levels, let's say anywhere below about 1848, that would signal more downside to come. On the upside, we need to get back above both Friday and Thursday's highs, which correlated back up to about 1892. So I would say close above 1900 even would be a signal for the bulls, and you'd have a quick trade back up to the 50-period moving average around 1920. But the real trade will come if we get back up to that level, trade sideways for a little bit, and then set up a breakout higher. So that would be kind of the trade that I would be looking for if we are able to regain our footing here on the Russell. A break above that 1920, 1925 level would be the play that I would be looking for. Otherwise, again, if we break down here, lower prices probably to come. Going out to the Dow Jones. Dow Jones is actually holding up better than most of the other sectors. It did break its 50 here, and let me zoom in real quick so you can see this a little bit better. It did break its 50-period moving average on Friday, closed below it. That's the red line here, but it held its 9, and it is still fighting to hold that 9-period average right now. So a little bit cleaner look on the Dow Jones, but still weakness. So not overly bullish, not overly bearish. We are just in kind of a high volatility up, high volatility down. Anytime you see that, it's wise to just kind of mark the highs, mark the lows, and then play something once one of those breaks. So, kind of setting your triggers up on each side and then saying, I'll play whichever side the market gives me, because we can ask for what we want, but we might not get it, right? So we have to trade what we see. Going out to the dollar. This is why the market has been struggling so much. The dollar is just on a tear still. A lot of market participants can't believe that it is still going as strong as it is. We had a hesitation candle here that could have been a reversal, didn't, cleared it, and it's just continued to be very, very bullish, and that is partially due to the European and US dollar cross pair. The euro broke down, and that gave a lot more strength to the US dollar, so we're seeing that continue on its tear, not showing any signs of slowing down. We really need this chart to take a breather for the bulls to be able to come back in any significant fashion to the rest of the market. Going out to the sectors real quick, let's just blast through the sectors and see what's going on. And actually, I'm going to leave this on a weekly chart for it. So USO is our United States Oil Fund ETF. Just broke out of a major level right here, and honestly, it is probably rocking back up to 92 for all-time highs. So we are looking at higher prices on oil moving forward, and that does not look like it's going to stop anytime soon. Most of the strength of the market that has been holding the market up as well as it has been in oil stocks in that sector in general. So again, XLE, energy sector related to oil. It has been bullish, had a little bit of hesitation this last week, but still showing strong. A breakout of all-time highs around 94.71 would be tradable on XLE. Going out to gold, this is the miners ETF, have a ton of resistance overhead, so no real trade here. It could potentially be a long-term pickup if we are able to get back above our decreasing 20-period moving average here. So above, let's say, $30.60, if we get a pattern developing this week that says higher prices, I will try to put an update in on that in our Facebook group if we end up getting that, but that chart needs a little bit more development because right now it is leaning a little bearish. Same thing on actual gold ETF itself, GLD. Right now we had a lower pivot low, lower pivot high, lower pivot low, lower pivot high. Until that trend changes, you have to be bearish leaning. Any long-term positions you have, you need to probably have covered calls on them to protect to the downside a little bit and bring in some cash flow. Going to remain neutral basically on this, in my opinion, until we get back above the 20-period moving average, which is around 180.63. I have a hard time seeing this selling off considerably, mostly because even though the US dollar going up is negative for gold, it has been holding up really, really well the last, several months in the face of the US dollar doing this. So that kind of tells me that there's a little bit of hope for gold here to hold these moving averages and hold support down around 173. Going out to utilities, obviously bearish downtrend still. We have higher highs, higher lows. That is our slope. Really needs to clean itself up. Anything underneath this diagonal resistance line, I'm just not interested. So we really need to reclaim probably about $68 until I might get interested in utilities. XLF actually put in a decent week here. Technically, you could call that a trigger to the upside. I'm going to be very cautious on it right now because it did actually roll over on the MACD. And there just wasn't much follow through in the week. We did have a little bit of a pullback towards the end of the week while the rest of the market was selling off here and kind of came back down into the range that we had previously broken out of. So we need to reclaim that, clean that up, and reset that pattern. Going out to XLY, our consumer discretionary, it's holding up okay. Don't particularly like that candle. Honestly, I probably see this chopping sideways for a few days before it picks a direction, so be ready to play one way or the other on this as the week develops. But right now, nothing really for a trade going into the actual week. It still is showing overextended on the RSI, and the MACD has rolled over, so we need to see those two indicators clean themselves up. And similar on XLC, our communications ETF here, very, very similar. Honestly, need to see that clean up a little bit here and probably get back above 68 for any bullish play. Other than that, honestly, probably a little bit more neutral chop than anything else for the next couple of weeks. Looking at silver, trying to hold support here. We've had a fairly significant support level around $20.40 for a bit now. It has held, it did get a bounce on it, but we are in kind of this triangle pinch right now between a horizontal support zone and diagonal resistance zone. So we really need to see that break out of that diagonal resistance zone before we're interested in silver. Real estate, stuck in the mud, not doing anything, just choppy mess. XLB, our home builders, our materials ETF, probably have to give a nod to the bears on this, although slight. We are kind of still just in this choppy range, wide choppy range here, and have been for quite a while, but there's not really much directional here. If anything, we have put in a lower pivot high there. Now we're fighting to see if this puts in a lower pivot low, or if we can hold this level there. So we're kind of looking for a break either of the pivot low here or breaking back above the diagonal resistance that's in play. XLK, this is not a good look. This to me looks like a little bit more of a bearish rounding top than it does anything else. It's too early to officially call that. We are still holding the 20-period SMA here, but if we do take out the low and have one more candle close down below that, that will be basically setting up a big M for murder topping pattern. That is a double top pattern right there. So if we do have another candle put in right here, it'll come down and it'll basically create a little neckline right there around 162. And if that breaks, my guess would be coming back down to the 50-period moving average. So it's really, really important for the first part of this week for those moving averages to hold and for us to get some support built in here, because right now that doesn't look particularly great. Going out to XLI, kind of similar thing. We had the M here and actually did break below that. Closed basically right at it, so we'll see if there's any follow through or not. If we do break down, it probably will come down to the 50-period moving average again, and the MACD has rolled over here and set a slightly lower high on the weekly from the previous high, so that is not a great look on our ETF for industrials. Going out second to last, our consumer staples for XLP. honestly, bunch of neutral. We are sitting on a significant support zone, but we are underneath pretty much all of the moving averages. So this needs some time to clean up. Not really interested in any trades in that area right now. And finally, similar for XLV, our healthcare ETF, if this breaks down below about 131, that will be kind of a signal towards the downside. And some traders would look at this and say, we might have a little bit further to go, 131, maybe call a trigger below 130 for the downside. So kind of pick your poison on that, whether you trigger 131 or if you trigger at 130. But this is not looking particularly great. And if we do break down below that 130 level, there might be a shorting opportunity there. So anyways, that is the wrap on our sectors and our major indices. Just real quick, let's dive in and look at our indicator for market internals here. And again, just a refresher, couple closes in a row above positive 50 is bullish, couple closes below negative 50 in a row is bearish. And we are just kind of hovering in this neutral range. We haven't really gotten any clear signals one way or the other since really back in mid-August. So we're still waiting for another clear signal to develop here. But right here, nothing really to see. And then going out to our advanced decliners, we had a fairly strong Thursday and then a massive reversal on Friday, swung to the opposite extreme. Technically, this is looking a little bearish to me, even though we do have our 20-period moving average slightly above the zero line, which is kind of our line in the sand. It is starting to curl over a little bit, and it is close enough to that line that it is threatening to break down now. So again, if we get negative movement this week, this will be confirming and rolling over towards the bears being in charge. So hope that helps, guys. Keeping it short and sweet this week. Enjoy your trading. Let me know if you have any questions and if I can be of help in any way.